This 20-year-old has made a series of smart moves over the last year that increased his investment portfolio by 8%. This is what Eugene's portfolio looked like in September 2024. And this is September 2025. Eugene made a series of defensive and fixed income changes and ventured into new investing territory. And his portfolio went from $50,000 to over $54,000.
What I really like most about Eugene's strategy and his performance is that he didn't just get lucky. And the reason why is because he consciously moved towards a more defensive way of investing. So this tells me that he matures as an investor, and he thinks about risk first, not just returns.
Eugene ventured into the US market for the first time on Willie's advice. Willie advised Eugene on his portfolio a year ago when Eugene was featured on Money Mind for his plan to grow a $1 million investment portfolio by the time he turns 33.
For the US stocks wise, majority of my funds is mainly based off on value investing. So I always look to the big companies like who's their local champions. So like example, like Google, all those, Alphabet, that's it. Then for the other side, I put minority of my funds into speculation because I find it US is a very volatile and a very exciting market to be in. So I invested that for speculation side, I invested mainly in IPO play. Yeah, because IPO, sometimes the companies boost up more than 20 times or 2 times or 3 times of their value. For the speculation side, I do sell them quite quickly because I also don't want to lose all of my money.
I noticed that he has come up with a barbell approach in US stocks. I think that's great. So having a barbell approach means that on one hand, on one side, he is investing in very strong champions which have a dominant market position, for instance, like your Alphabet or your tech giants. I would encourage him to maintain this barbell approach so that this also allows him to look at more enterprising opportunities coming from the new IPOs or the speculative stocks.
But Willie has some concerns about the amount of cash Eugene now has in his portfolio. Eugene says he increased his cash component because he missed out on good buying opportunities because he didn't have cash on hand when markets took a tumble because of Donald Trump's tariff threats earlier this year.
Because there's so much global uncertainty in the world, so I would keep on keeping more cash such that I can wait for better opportunities, such that when situation like example the US Liberation Day on the day itself happens again, I could take the opportunity and average down such that I can sell it at a better price.
Willie calculated that Eugene's portfolio grew between 13 and 16%, taking into account his stocks and bonds. But overall, it's 8%, including the cash component, which doesn't generate any returns. So he's suggesting Eugene start a watch list of stocks he wants to buy.
Try to write down when the market sells off, let's say by 10%, how much of his cash is he going to deploy? If the market sells down by 20%, how much of his cash is he going to deploy? So this means also having a watch list in your drawer. That means knowing what stocks you like, you put it down. It might not be the best price to buy, or you might not want to buy immediately, but you know that this is something which you want to put in your portfolio. So that the next month when you take it out again and you look at the stock market, if the price which the market offers you is a reasonable price, then I would buy it.
Other moves that paid off, Eugene doubled his fixed income portfolio, seeing bonds as a safe bet while waiting for better buying opportunities.
Fixed income has a very nice benefit, like example, where it's like REITs, where it gives certain amount of percentages per year. Or most of the time for bonds, they give semi-annually or annually. Yeah. So why I'm a fan of them is because during the past year, the T-bills has dropped. Their interest rates have dropped. So it doesn't appeal to anyone who want to play safe anymore. It's like my safe play when there's no other area to go to.
Eugene believes he's more disciplined now compared to a year ago because it's harder to find value in the stock market now. With many stocks at all-time highs, he's had to be more selective with how he chooses what to invest in.
I like dividend stocks is because the cash flow, it helps with my cash flow in a sense that every quarterly I know that there's some money coming in such that I can spend it or reinvest it into my portfolio such that it can find better opportunities out there. So firstly, for me, I go for Singapore stocks. So I look at the blue chip stocks that are found in the STI index. So from there, I read up about their fundamentals through using my background knowledge of accounting and also understanding what's the catalyst, like what's the news behind them. I'm looking out for example, the cash and cash equity. So this shows how well does a company do in the sense that whether they can be able to acquire other companies, or what are they going to do with the cash to try to reduce their loans and all those.
Eugene's self-funded investing journey started 6 years ago, using $3,000 he saved up from allowances and red packets over the years. His goal is still $1 million when he turns 33. For now, he has another year of national service before he starts university, and he's using his monthly allowance to pump more cash into investments. For the year ahead, he says he's looking to further explore the US market and continue his search for value.
I find secret of success is always being able to adapt, being able to see the market situation. Not every time having so much equity will be the answer, and not many times that cash is always the answer. There's always a need to understand the opportunity cost of it.